Investing in a global equity fund, the makeup of that fund, the constituents of that fund are going to change anyway. But what you're buying is human endeavor. You're buying into sort of capitalism as a system, essentially. For all its flaws, it's still the best system we've come up with to build sort of corporate and communal wealth. And because you're buying, what would a global index fund? 25,000 stocks? No, less than that.
Maybe it depends on the index, but like a VWRL maybe 3 to 4, but you can get some with 6 to 8,000.
Okay, right.
If you include small caps, it gets like 8,000.
That's probably diversified enough for most people.
And you're getting gold companies in there.
Yes,
you're getting
exactly.
miners. You're getting commodities. You are getting every type of asset, really.
Yeah, you are.
Exposure
That's often
to.
the argument given for S&P investing as well, because it's American markets, whatever it is, 65% of the global market. You're getting global sort of exposure through American companies. I'd still prefer personally to go full global, but yeah, I think that's enough for most people, man. You complicate it to the degree that you want to, but for the vast majority of people, that's fine. I am 100% global equity invested.
There you go, and that's good because you're a man of experience.
I've tried other stuff. I get bored of it, and actually this is the stuff that will work consistently.
Yeah, and then you don't I find that because the American decision, especially. You are making a decision. If you say, I'm only buying America, you're making a decision. And then I think that complicates it if things go wrong, which they might. America might have another lost decade like it did between 2000 and whatever. And then you're sat there going, oh God, should I be buying France or whatever? If you buy the world, well, I own it all. Like there's no decision. There's no decision to make. Like I've got a bit of everything. Yeah. China does well one year, great. I've got a little bit of that,
And as the world changes, as I think it's inevitably going to do over the coming decades, as the world increasingly moves eastern, wealth moves eastern, all that sort of stuff, you will capture that. Mm-hmm. So you don't have to think about it.
Yeah.
I'm all for that.
And if America continues to dominate, you capture that as well.
Exactly right. So. It's the sort of ultimate lazy investment.
How do you think that rationalizes with the human brain, that the simplest, easiest thing to do is the best? Because I think that's complete odds at how we think about life.
It is. We hold complexity as a badge of honor.
Yeah.
Where it rarely is. I think usually the people that gain from complexity are the professional advisors, right? The number of reports I've seen written by advisors for client situations, I just think the only people this is serving is the advisor. There's no need for this level of complexity. And I think that's a fairly good rule to live by. It's like, who is benefiting from this complexity? Is it the lawyers? Is it the accountants? Is it the financial advisor? It's almost certainly not you. Complexity usually adds cost. It reduces engagement. So you're less likely to be engaged with a complex portfolio than you are with a simple one. And those are fundamental negatives. So simplicity wins every time for me.
This is a clip from our chat with Pete Matthew, the godfather of this YouTube finance game. Also Damien's dad.
Pappy.
El
Jefe.
Click here for the full episode.